What's up YouTube? It's Todd Horst here with Tasty Tracker, and I've got another small account challenge update. This one, as with the past couple ones, is going to be super small. So I opened up the Facebook position today. I sold the 260 and bought the 255. And I received a credit for 142, and that means I'm risking 358. If I go into the notes here, the 50-day SMA is around 260, so that's right at the sold leg, and then it's been building a base around 266. MACD RSI is curling up, 36% in the money, 31 days to expiration. Typically I like to go around 45 days to expiration, but I didn't actually want to go out to November for this one, so I stayed with the October expiration. But to sort of compensate that, typically I go around 44% in the money, and this one I did only 36. Yeah. So I do think, I do note here that 278 is resistance, so let's go over and look at the chart. So I'm seeing 278, 279, 280, somewhere in this range here being resistance. That's a 20-day SMA. A lot of stocks, and you can see here, these couple days here, came up to here and ultimately got rejected. So there's a possibility of it turning down or going up. I mean, obviously, it's a 50-50 shot what it wants to do. But this is the 50-day SMA. It's been building, like I said, building a base in this area as support, and then we also have this as support. But if we don't get above here and we repeatedly try, then it's going to fail to break out and look for the downturn. On the plus side of things, because it's been forming the base here, RSI is turning up and MACD is turning up. So I'm not sure how many more red days it'll take before the market will. It doesn't need to go as exponential, but it's just been treading water. So there's a lot of setups that look exactly like this. Almost every single ticker that's on my standard watch list looks exactly like this. So yeah, the question is, do we sort of resume going up at a better pace, or start turning down to the downside? Now, if I were to draw a trend line, I would draw something like this, and that makes a lot more sense to me. And so what I would actually say is that this spike that we had a couple weeks ago was an outlier, and this is the period where I was saying I was moving to a large percentage of my account being in cash. So from this perspective, I'm not really worried because it's still within what I would say is a normal channel. It's just that if we continue to stay in this channel and can't break out of it, then it's going to turn over. But yeah, I'm still holding most of my account in cash. You can see right here I've got 3,500 in cash. So with the selling the put spread on Facebook today, that brings my cash up to almost $7,000. Of course, I have to earn that. And the money I continue to lose every day is just like with the virus. When we're having down day after down day, these are just paper losses. That doesn't mean they won't be realized. They may, and very likely some will be, especially some of the larger losers, like right now Sedge is down. Amazon isn't down that bad. That's just because the market closed. And I can tell that because Amazon was up today, so this is going to be a positive value. But Sedge is still 25% down. So unless we get a good jump in there, that might be a loser. I'll be looking to potentially roll that in the next week or two, depending on where the market goes, whether I can get a credit for it or not, whether I think it's too far gone. Judging by this price being $199 and the sold leg here is 200, chances are I won't roll it at all, but even if I would roll it, I could probably do so for a credit. So anyway, here's the overall chart, and again, If we go to this, they're all on the same expiration. So I like to a lot of times view my chart for the next expiration, but since everything is the next expiration, I can leave them all on, and then I'll go through individually here. Apple looks fine. Facebook looks fine. Obviously, I just put those on. PDD looks fine, even though I'm down 17%. Sedge is right on the bubble, and Amazon is also right on the bubble. Let's see, we sold the 31.50 and it's 31.56. So at this point, the chart, I mean, you can tell I'm right on the bubble, but my account looks way worse than what it, in a sense, actually is. So it's, again, if you kind of ignore Amazon there, it's saying that so far I'm down $100 for this expiration, but if things stay exactly where they are and some time premium gets sucked out, we would very likely realize a gain for most of these anyway. So yeah, that's basically it. If you have any questions, let me know and I'll be happy to answer them. Thanks.